All right, guys, we reached another strategy. Okay, so you already learned about strategy number one, the initial breakout, strategy number two, the complete breakout, the CBO. Now we're learning about strategy number three. The first two strategies, they are basic strategies. You can stick to them, and I even highly recommend, if you're a beginner, stick to them first. Okay, master those two strategies. Once you do, you can move on to the advanced ones. What we're going to be talking about now, strategy 3, strategy 4, strategy 5, they're advanced strategies. Okay, they carry a little bit more risk. Okay, just because, like I said, they're a little bit more advanced. And however, they're very powerful. And this strategy number 3, the advanced breakout or ABO, it is again the second strategy I have personally developed. And the reason why I developed it is for this one specific reason. There was a time where there were these beautiful setups, and I was waiting for these beautiful setups on the higher time frames to play out, and I'm waiting and waiting and waiting, and finally there's an entry. Okay, and I placed my orders, and I remember it exactly. There were multiple opportunities to get into it. There was an IBO opportunity to get into it, and I placed an order to get into the positions. Then there was a CBO a following day, and I placed an order to get into the position. I wasn't able to get into any one of them. I wasn't able to capture the IBO. I wasn't able to capture the CBO. Why? Because it never retraced. It never pulled back to trigger me into the entry. Okay. So I started thinking, I'm like, okay, so what the fuck just happened? Literally perfect trades, perfect higher time frames, but I couldn't execute, And at that point I started looking, and I'm like, okay, is there anything that happened before? Is there anything that's happening before the IBO? Okay, so you learned that IBO is kind of like right at the beginning, is the initial breakout. The CBO is the complete breakout. The advanced breakout is what happens before that. Okay, that's why it's an advanced strategy, but it's what happens before the breakout. Okay, it's what happens before the initial breakout. So this is a breakout strategy. We're playing the breakout here. That's why it carries a little bit more risk, but it literally is one of my favorite strategies too. The people that I have already taught this strategy to, it is also one of their top strategies as well, because it is very powerful, and you can make 2% really quick, because of the target placement. It's a very quick move, very short move, and you can make, like I said, a quick 2% really fast. And even if you push it farther, you can make even much more, because guess what? You're getting in at the earliest entry possible, literally, So the IBO, you're already getting in pretty early. The CBO is kind of like the next step. The advanced breakout will be the earliest entry out of every single strategy that I'm going to teach you. Okay, it's literally, it happens first. The way it's structured is the advanced breakout happens first, the initial breakout happens second, and the complete breakout happens third. So now with these three strategies, you're going to have this package, very powerful package that if there's no advanced breakout present, because you're going to be looking at pairs and you're going to be seeing these great opportunities, and you're going to be wanting to catch that run. Okay, and now you're going to be able to catch a run with an advanced breakout. Okay, the beginning of it. If the advanced breakout is not present, you still have another shot at catching that run with the IBO. If the IBO is not present, you still have another shot at catching that run with the CBO. Okay, and later when we're gonna learn the next strategy is the part 4. It's the fourth strategy to catch the move after the CBO. Okay, so they are developed in a very clever way in that sense, and the advanced breakout is special because literally you are catching it at the very beginning, so it's a very quick move. And but with that said too, you have to be very patient with this strategy. Okay, write that down. When it comes to advanced breakout strategy 3, the ABO, patience is key. Write that shit down. Literally, patience is key, because since this strategy is more advanced, you cannot be mediocre, it cannot be okay, it has to be perfect almost every single time. You have to be looking for perfection when it comes to this strategy, because it is more risky, and if you're focusing on perfection, your strike rate will stay high. Okay, so before diving any farther into this, know that this is where we're going to be focusing on price action patterns a lot. So remember the rising wedges, the falling wedges, the flags, the descending triangles, the ascending triangles, okay? That's what we're going to be focusing on right now in this lesson. To fully play the advanced breakout strategy, you have to know those patterns. So if you don't know them yet, watch the lesson, but then go and review the initial lessons on price action patterns, okay? Because they are going to be extremely important when it comes to the advanced breakout strategy. So enough talking from me, guys. Let's dive right into the explanation of the advanced breakout strategy. And in the next lesson coming up, we're going to be again talking about the entries, the stop loss, and the targets, okay? So just know, this is now you're getting into the advanced territory of the strategies, and it's exciting. You already have the basic package, now it's the advanced package. So with that said, guys, let's hit the charts and I'll see you there. All right, guys, so in this lesson, we're digging into strategy 3. As I already mentioned in the introduction, this is an advanced strategy. So it is a little bit more aggressive than the other two. The other two are basic strategies, so the IBO and the CBO. They're basic, they're very good strategies for beginners, and for everybody else. Those two strategies, the IBO and the CBO, they're going to be some of the most profitable strategies in a way that they happen quite often, and they're very safe, meaning that, the IBO already has that trend confirmation with the 1 hour 50 EMA break, right? The CBO has full confirmation with the 4 hour 50 and the 1 hour 50 EMA break. Right, that's why it's a complete breakout. This is an advanced breakout. So guess what? It happens before the IBO. It happens before the CBO. It's an advanced breakout. So this is something that literally happens right at the beginning of that run or right at the beginning of that pullback before an IBO or CBO even happens. Okay. So that's why it's a little bit more aggressive. That's why it's a little bit more advanced, because it doesn't have that trend confirmation. So write this down. First thing, in regards to the ABO that you need to know is patience is key, okay? Patience is key. Write that down right now. And it's extremely, extremely, extremely important with this strategy. And when you really follow the rules and approach it with patience, then it doesn't even matter that it's an advanced strategy, you will still have a really high strike rate, and the reward risk ratio on this strategy is a minimum of 2-to-1, So even if your strike rate is 50%, you're still making money, but if you approach it correctly, your strike rate should be more than 50%. It should be somewhere above 60, somewhere around 60, 70 in that general region. But you got to follow the guidelines, and you got to be disciplined with the ABO, that's also important. Write that down, disciplined by following the rules. So with that said, I'm going to show you guys an example here of an ABO, and this is a setup from earlier in 2018, from January of 2018. It's a nice one, and there's a good lesson behind it as well that I'm going to explain in part 2 of this strategy. So in the next lesson, which is going to be the part 2, it's more about the management, but let's talk about it. Okay, so the ABO, when you're looking at the daily chart, that's pretty much where you're going to start off by looking at it on a daily time frame. Typically, that's how you're going to find them. And ABOs typically happen at major zones, major resistance areas or support areas. Okay, so that's typically where they happen, at major resistance or support regions. So right away you can kind of see here that we have major resistance. They acted as a beautiful double top here. Intraday rejections, another rejection, the trade happened right there. Let me give you an arrow right here. So that's where the position occurred. That's where the ABO occurred, short. And in this small movement, I already made 2%. That's how powerful the strategy is, because in such a small movement, you can make 2%. And if you let it run, then all of a sudden that 2% can turn into 4, 6, 8. I'm going to show you a position in the next, one of the examples in this lesson that I pushed it for over 8% in a very similar way as this one. So we're going to look at that, and it's a very powerful strategy. And like I said, a minimum reward risk ratio on this is 2-to-1. Otherwise, I'm not going to be taking the position. But let's go through the guidelines. So you will not have a reversal candlestick. Okay, write that down. with an ABO, you will not have a reversal candlestick. You probably will have deceleration. Majority of the time you will have deceleration, but you may not have a reversal candlestick. Once in a while, maybe, but chances are that after you take the position, then that reversal candlestick will develop. So the reversal candlestick will typically develop after you already hit profit, after you've already taken the trade. So you see how it's important to, first thing that you need is really strong resistance. Okay, that's the first thing you need, is really strong resistance or support on that daily chart. Okay, and that's major key. And definitely write that down. That's extremely important. You got to make sure there's major support and resistance with a lot of rejection. So over here, we can already see that this 89 level has a ton of rejections. If we zoom out farther, there's even more rejections here. Some intraday hits, previous low, previous highs. It is a very good support and resistance level, right? You can even look at it the weekly time frame. You get the triple tops on a weekly, and then you zoom out, and there's more kind of rejections off of this level right here, and it goes farther out as well. There it is, So it is a very strong horizontal support and resistance level, and this is the kind of levels that you need to pay attention to when trading ABOs, okay? And that's the first criteria. The first major criteria is that you need to have some strong, really strong support and resistance, because you're kind of going in blind, meaning that you're going in without a reversal candlestick. And that's okay, because the next criteria is going to be the intraday charts, right? And on the intraday charts, it will all make sense why you will not have a reversal candlestick. But that's the most important thing, right? So without that, I can pretty much say that if the intraday chart shows me deceleration and a proper price action pattern breakout, because this is a breakout play and you're going to be looking at price action patterns. So if you're not familiar with them, make sure you review those lessons. There was 4 of them. So when we're looking at price action patterns, you're going to be looking at wedges, triangles, stuff like that. And a lot of triangles, a lot of wedges. And when that breakout happens, well, that's when you're going short. When the breakout of the triangle happens, that's when you're going short. And at that point, you can be pretty sure that this level is being rejected because the lower time frame has confirmed it, right? So let me show you what I mean. So first criteria, major resistance. That has been met. Second criteria, triangle. So typically you're going to be looking at a 1 hour time frame for this, So here we have a perfect triangle. We have the triple tops. So price went up, rejected once, fell down, twice, 3 times, and then squeezed to the downside. Okay. At the same time, you're going to have typically bearish MACD divergence or MACD divergence in your favor. Okay, so the price action pattern is extremely important. Divergence is extremely important as well. And that price action pattern should be topping out at that major resistance that we saw on the daily, right? And you can kind of see here, we zoom out, and there's that major resistance. This is again 89.0. So that's where the price action pattern should be topping out, and then you're going to be going short right there, kind of like playing the breakout. Okay, so with that said, let's go over the criteria real quick again. Major resistance on a daily time frame, beautiful price action pattern on a 1 hour chart, bearish MACD, and you're playing the breakout. So that's the first things that you need to see. Okay, the next thing comes on the 4 hour time frame. So the 4 hour chart should be kind of overextended, meaning that it should be kind of running and in need of a pullback. Okay, so this is kind of it. It's been kind of in this bullish run, and now it kind of exploded to the upside. It's sitting at the double tops now, the previous highs, and it's in need of a pullback. So that's the next criteria. The 4 hour chart needs to be in need of a pullback. Okay, so we need to kind of say that it's been overextended and needs a retracement. Now, the next thing is momentum. Okay, this is a momentum strategy, and we want to be entering when there's high volume in the market, not when there's low volume in the market. Okay, that's extremely important. When there's low volume in the market, such as if you're trading a European pair and the volume is going to be low during the Asian session. This is an Asian pair. I'll show you a European pair next, but this is an Asian pair, so the volume stays up pretty high, throughout the day, because it's being traded during the Asian session and then continues to be traded later in the day. So the volume continues. With Asian pairs, it typically continues to be high, in majority of the time. But that's important. You got to be trading with high volume, because if you're trading on low volume, this setup has a 50% strike rate. At least that's what I have found in my analysis and my backtesting of this strategy. Recently, I did a big backtest on it, specifically focusing on that. So I went through every single one of my advanced breakouts that I have done since I started trading the strategy, and literally looked at every single one in detail and focused on high volume or low volume. Compare the two together, and I noticed that high volume positions, whenever I'm entering kind of at the beginning of that high volume stage in the market, that's when the best opportunities present themselves. Okay, that's where the highest strike rate will be. Whereas if I'm entering positions with low volume, sometimes I get knocked out of the position when when volume kicks in. Okay, and therefore my strike rate is lower on the low volume positions. It's still at 50%, so with a 2-to-1 reward risk ratio, I'm still making money, but not as much as the high volume setups. So it's okay to take a low volume trade if it's just beautiful. But I'm going to tell you, the strike rate will be lower with low volume and higher with high volume, okay? And that's pretty much this volume indicator. So we haven't really used the volume indicator much. We're going to be using it for this strategy, okay? For this strategy, also ignore the pivots. You're not going to be utilizing the pivots for this strategy, okay? So ignore the pivots. You're not utilizing that, and focus on volume indicator instead, okay? So let me kind of go through it again real quick, because I covered a lot of things here and you got to be taking notes. So ABO strategy, patience is important, okay? First thing that you need to have is major resistance or support, okay? So major support and resistance on a higher time frame. In this case, it's being the daily chart. This is a day trade, right? So you need major resistance somewhere on that daily time frame. Then we need to make sure that on a lower time frame, the trend is coming to an end, okay? So think of the Elliott wave theory. We haven't really talked about that, but when Elliott waves, pretty much think of wave 5, when wave 5 comes to an end. So that's pretty much when you're going to be sitting at resistance, when you're going to be developing this price action pattern kind of thing. At that point, it's pretty much the end of the run, okay? So that's why we need to focus on the price action pattern. So now we have that resistance. The next thing that we need is on a 1 hour time frame, we need a price action pattern. It's typically some kind of a triangle, like an ascending or a descending or a wedge, but it can be any price action pattern, but it's typically triangles that I found. And that's extremely important. So you need to have a beautifully developed triangle pattern. Why? Because this triangle tells you that this 89 level is being rejected and that price action is decelerating at that 89 level. So you're not kind of entering a position blind in the opposite direction. You're making sure that price action is decelerating at that 89 level, at that major resistance, and then eventually rejecting it when volume kicks in, okay? Next thing is obviously MACD divergence. It's helpful when you have MACD divergence, because guess what that tells you? That a trend change is potentially coming, right? So you got MACD divergence, you got that triangle price action pattern showing you deceleration, you got that major resistance, and that major resistance is also present on an intraday time frame, right? That's also very helpful when you have that. And then the next thing is momentum, okay? So when you got that, you got to be waiting for momentum. So when you're looking at the 4-hour chart, the 4-hour chart is going to be overextended, right? And then you got to make sure that there's enough room down to the 4-hour 50 EMA. Actually, yeah, let me talk about that first. That there's enough room down to the 4-hour 50 EMA, because the target here will be the 4-hour 50 EMA or just above it. So you need to make sure that you're able to get at least 2% out of this position targeting that 4-hour 50 EMA. So as you guys know, the best targets for the IBO. The IBO, the safest target is the 4-hour 50. For the CBO, the safest target is the previous lows or the previous highs, right? For the advanced breakout, the best target will be the 4-hour 50 EMA, okay? Anything after that, it's a little bit more risk. But the best target will be the 4-hour 50 EMA, period. So that's 90% of my trades. I will target the 4-hour 50 EMA of the ABO. Okay, so I need to make sure that I can at least get 2% with a decent stop loss. And then you're waiting for the setup, so you put in your position sizing. Your stop loss needs to be kind of above the highs, above all highs. Make sure it's a decent stop loss, protecting you nicely. And we'll talk about the entry stop loss target in the next lesson, part 2 of this strategy. But that's kind of what you need to focus on. And then the last thing for it is the momentum. Okay, so once you already find the pattern, once you already notice that there's major resistance, the pattern is there and the MACD is there, and now you're being squeezed out of that pattern. So you're going to make sure that you're kind of like being squeezed. Sometimes it's okay to enter at the double tops if you have like amazing candlestick formation, and I'll show you an example. But the main thing is you're being kind of squeezed out of this pattern, and then you got to make sure that you have bearish momentum to the downside when you're taking that trade, okay? And then you're taking it on momentum, on high volume to the downside when it breaks the 5-minute 50 EMA, okay? So you're taking a live 5-minute break to the downside. You cannot place an order with this. This is a strategy that needs to be taken live. I don't think I have ever placed an order on an advanced breakout. It has to be a live entry, and it has to be this 5-minute break to the downside with momentum, making sure that you have like a rejection happening. It's very helpful when you have like a massive high test reversal or a big bearish engulfing. And I'll show you a few other examples that have that very clearly, right? This one has kind of this bearish doji, the triple tops, the bearish doji, and then the 5-minute break, right? That eventually developed this bearish engulfing on a 4-hour chart. So that's the criteria, guys. Okay, so I'm gonna kind of leave it at that, and I'm gonna jump on to the next example, and then in the next lesson we're going to dig more about the entry, the stop loss, the target, and all of that. But at this point you have a pretty good understanding. So what do we need? We need major resistance on a higher time frame. You're not going to have a reversal candlestick, right? You need major resistance, and understand that there will not be a major there will not be a reversal candlestick on that time frame. You will only have major resistance. And because you will only have major resistance or support, you need to then look at the lower time frame, such as the 1 hour, and make sure you have some kind of a price action pattern that tells you that the market is decelerating, that we're at the end of that intraday trend, okay? That we're at the end of that wave 5 kind of market when it comes to the Elliott wave theory, right? So at the end of the trend, that's where those price action patterns will come in. Then you need to make sure that the 4-hour chart has enough room to go down to the 4-hour time frame for you to make 2% with a safe stop loss above the highs. Okay, and we're going to talk more about that in the next lesson. And then the last thing you need is momentum. It has to be taken during high volume, or preferably during high volume, making sure that there's strong momentum in your favor. It's very helpful when you have a major reversal candlestick, like a high test, tweezer, bearish engulfing, right? So that's very helpful. After the trade was taken here, the 4-hour chart developed a bearish engulfing. Okay, so I'm going to leave it at that, and then I'm going to show you the next example and talk about a little bit more detail, and then the next lesson we'll focus on the entries and stuff like that. So see you guys in the next example. Alright guys, so in this example we're going to have a look at another ABO, and this is on Euro Kiwi Long from December 2017, okay, taken December 18. So I want to say just quickly, trading around Christmas, since I forgot to cover that in the previous lesson when I explained the position from December. But trading around Christmas is, you only have to understand one thing, is that the market, the FX market really closes a few times a year. And that is pretty much Christmas and New Year's. That's about it. So that's typically when people take their breaks. That's when traders really, and investment bankers and stuff like that, that's when they take time off from trading and from charts. So during Christmas week and the last 2 weeks of December, volume is kind of slow, so there's not much going on. But I found that personally from, since 2012, since I already been trading, that there's really nice opportunities, Even though there might be lower volume than normal, there are some nice opportunities, but you got to be patient in regards to them playing out. It's because it's Christmas, they might take, an extra day to really move or something like that because of the lower volume. But just so you guys know, keep that at the back of your mind, that last 2 weeks of the year are the slowest weeks in FX and just trading in general because of the holidays, and specifically because the FX market closes. Those are the only 2 days that it closes in a year. But there's still decent opportunities, but be patient and make sure you just keep an eye out for good opportunities, not just mediocre stuff, So with that said, let's have a look at this position here. Again, this is Euro Kiwi from December 2017. And it's a really nice trade. That's why I wanted to put it in here. But it's also a little bit discretionary on a daily chart in a way. Okay, but it's a perfect intraday for an ABO. So that's kind of what I want to focus on. It's a perfect intraday charts, 4 hour, 1 hour when it comes to the advanced breakout setup. It's a really nice one. It's going to give you guys some clarity on exactly what you're supposed to see, how it's supposed to look like. This example, really pay attention to it because it's going to tell you exactly what a proper intraday chart, the 4 hour and the 1 hour for the advanced breakout are supposed to look like. So with that said, let's jump on the higher time frames again and go through the criteria real quick. And like I said in the previous example, in the next lesson, Advanced Breakouts Part 2, we're going to be covering more in depth in regards to the entry, the target, and the stop loss and stuff like that. So with that said, support, right? We need to believe that there's some kind of a support or resistance zone that price action has a really good chance of stalling at and rejecting, even if it's temporary. So we always need some kind of support and resistance. The best support and resistance is when you have those extreme highs or extreme lows, really the extremes in the market, But any really support and resistance with a lot of good rejections will work, So over here I have a zone. I don't think we really looked at a zone before, but a zone, I typically toss in a zone when there's like 2 levels close to each other, not too far. Like you see here, we have the previous low and you got this low, and this high. And then you get the recent low where I took the trade long from. Okay, the trade was taken exactly on the 18th, which is this first bullish candle right there. But when we zoom out on this time frame, let me make it bigger. When we zoom out on the daily chart, you're going to notice that again, this zone, both upper levels and the lower level is acting as support and resistance. So here we have 3 rejections of the upper level. Then here we have a double bottom on the lower level. Another rejection of the lower level, and a little bit more consolidation in that area. Consolidation still means that level is holding, right? And if we zoom out farther, again, even more hits off of that general area, lower and upper. Upper again, lower again. So as you guys see, this is a zone. So that means anywhere around that area, around the highs and around the lows, price action has a really good chance of rejecting, okay? So when you find sweet spots like that in the market, and on top of that, you have an intraday pattern, that could be an opportunity for a quick advanced breakout. Now, I don't want to say proper, but the most common advanced breakout that I would take would be in a run that is a little bit more overextended, like this one, So you see how this was going up and 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 up, and then started kind of decelerating that in this general region. So this is more of a common daily chart for an advanced breakout. It's like I'm waiting and waiting and waiting until it's really overextended. I don't want to really enter them too early into the run. I really want to make sure that the daily runs are so overextended and that they're sitting at some major resistance. This is going to pretty much tell me when it's overextended, I can be pretty sure that the intraday trend has come to an end, that a wave 5 of the Elliott wave theory has probably come to an end on an intraday chart. So when you see big runs like that on the daily time frame, chances are that the next major support and resistance level that it hits, it will also be an overextended or trend on a lower time frame, and also telling you that most likely wave 5 has come to an end or is coming to an end. But sometimes small opportunities like this play out, so you can see that this was just a small kind of run, but it was overextended on a lower time frame, but it is also sitting at that major support and resistance level. So we saw this zone is gray, has a lot of rejections, both upper levels and lower levels, right? However, you can also see that this daily trend has also been going up for a very long time, and we're starting to develop some bearish MACD. So I definitely do not want to take a long-term trade to the upside. That's definitely out of the question. So this would be a traditional kind of advanced breakout, quick in and out, take my profit before it even hits the daily 50 EMA. That's how this trade played out. I went long right here, quick trade up to the 4-hour 50, which was just below the daily 50 EMA. And the next example I'm going to show you is going to be totally different. It's also going to be an advanced breakout, but it's going to be with the trend, and you're going to see the difference in that, But these small plays like that, just remember that the main thing you need with this advanced breakout is major support. You're not going to have any reversal candlestick. That will happen after you take the trade, but you will have deceleration. You will have like 2 or 3 candles kind of slowing down at that support level. That's going to give you that wedge or that triangle on a lower time frame. You need enough price action kind of decelerating. That's what creates that triangle on a lower time frame. It's just most likely you're not going to have a reversal candlestick because that's what happens after the advanced breakout. Okay. So the thing that you got to remember is major support and resistance. That is a must. Okay. We need that. We need that major support and resistance. Then deceleration, keep an eye out on it. But the main thing will come from this intraday pattern. Okay. So when you see that major support zone and then you see a triangle pattern developing like this is a perfect falling wedge. It's literally a perfect falling wedge. It's what it's supposed to look like. And then literally a perfect squeeze to the upside. So this is perfect. Right now at this point, it's already decelerating at that daily zone. It's creating this falling wedge price action pattern. It has bullish MACD divergence, which tells us at some point there's going to be a trend change. And when you kind of zoom out on this 1 hour time frame, you'll notice that this has been in a bearish trend for quite some time already. It's already been trending for quite some time. So now that we're actually forming this falling wedge, we have this bullish MACD divergence. This is a pretty decent opportunity. And like I said, the intraday chart on this 1 hour time frame is perfect. This is exactly what this advanced breakout setup is supposed to look like. Let me make this triangle a little bit larger. Right, there it is. So we have that criteria. So the pattern is there. The pattern is great and it is there. Bullish MACD is also there. So the daily is good. We have that major support right on a daily chart. Check mark. Good. The next thing is, do we have deceleration on a lower time frame? 1 hour chart. Yes, we do. We have this price action pattern which tells us deceleration is here. Okay. Bullish MACD is also there. So we do have a good sign of a potential trend coming to an end. Right. Next thing is the 4 hour chart. Is the 4 hour chart overextended? Yeah, it is. It is overextended. So therefore, do we have enough room up to the 4 hour 50 EMA or 0.382 to make at least 2%? So this is when you would kind of plan your position at this point. And I'll show you how I did that exactly in the next lesson when we focus more on the entry, stop loss, and target. But the answer was yes, we did have enough room. I actually made 2.8% on this, and that still allowed me to have a really good stop placement. So we did have that. Okay, so we did have the reward risk ratio, so it does meet that criteria of a minimum 2 to 1, And the next thing is, do we have momentum? That's the last thing. So you see here how volume was low, low volume, low volume, low volume. Then all of a sudden volume started to explode to the upside, and then boom, trade entry happened at high volume, right? At the beginning of the London session. Great, exactly what I want to see. High volume setup. So momentum is there, volume is there. Now candlestick formation. Candlestick formation also tells us that the momentum is there. So look at this 1 hour chart. It's moving down, low volume is just kind of moving sideways and then just popped lower. And then boom, beautiful lotus reversal developed. And as this lotus reversal happened, right away following hour, actually this was here, right away the following hour, boom, we have this triangle breakout. I really love when the pattern really plays out to its fullest, meaning that it really goes all the way to the end. Because sometimes you're going to be playing a breakout like this if it's really good. But it's really perfect when it goes all the way to the bottom of the triangle, when you have that squeeze and it just gets squeezed out to the upside with a reversal candlestick. That's what makes it perfect, when you have a beautiful triangle pattern and then it literally gets squeezed out with a beautiful reversal candlestick and boom, breakout. and the trade was pretty much executed right here as the 5-minute time frame broke out to the upside above the 5-minute 50. At that point, this wedge was also being broken to the upside. Great. This is exactly the momentum that a beautiful advanced breakout is supposed to have. At the same time, on the 4-hour chart, we were also decelerating. So you also want to make sure the 4-hour chart is decelerating and not accelerating, right? You also want to see some kind of bullish momentum on the 4-hour time frame. And you can kind of see here, deceleration, double doji, and then boom, it just kind of started exploding, forming this bullish engulfing reversal candlestick, breaking the phase line, And at this point, the trade was taken up to the upside, targeting just below that 4-hour 50 EMA. So again, I could have pushed it a little bit farther for 3%, but sometimes I like to just put it a little bit lower because I know that price action may go down, push the 50 EMA lower, so I like to target that 50 EMA. But in this case, I could have pushed it a little bit farther and made like a full 3% on it, but that's okay. No biggie, better to have a safer target than stretch it, but definitely that 4-hour 50 could have been used as a proper target for a full 3%. And then stop loss again below the lows. So that's kind of it. In the next lesson, we're going to talk more about the entry points and the stop loss and the target, but I think you guys are getting already the hang of it. The entries and the stop loss and the targets, that's easy for this setup. Remember to avoid the pivots. The pivots are, you're going to be trading through the pivots all the time. Avoid the 1-hour 50. You'll be trading through the 1-hour 50 EMA all the time. Remember, you want to enter the pattern right here. You don't want to enter it up there. Why? Because when you enter it up here again, you're not going to have the reward risk ratio that you need. You will just barely get a 1-to-1. Okay? Whereas if you enter over here, guess what? You will have that beautiful target. You will have a decent stop loss. And if anything happens, if the 1-hour chart is being rejected, you can just bulletproof and not lose anything. Whereas if this kind of consolidates and falls back down, you will end up with a full loss. Whereas if you enter earlier, you can still react. You can remove your risk. You can move up your stop loss to break even point if you have to, or just, exit the position when you believe it's kind of failing to break out and it's going to go back down. You can just do a discretionary exit if you want, So there's just more opportunities with reward risk ratio, with stop loss placement, with target and management when you're entering at the bottom rather than the break of the 1-hour 50, right? It makes a huge difference actually. So quickly to summarize, guys, do we have support and resistance? That is pretty good. Yes, we do. Is price action decelerating that support and resistance? Yes, it is. We have about 3 days worth of deceleration here. Is this a long-term position? No, it's not. Why not? Well, it's kind of at the end of the trend. It doesn't have any higher time frame confluence really on our side. The weekly chart might continue higher, but again, the daily chart is kind of at the end of this trend, so I don't want to push it too far. So traditional target at the 4-hour 50 EMA is the option, period. Then, do we have deceleration on the lower time frame within some kind of a pattern? We do. We have this falling wedge. The 1-hour chart is decelerating within this perfect falling wedge pattern. Bullish MACD is also present, which tells us trend is coming to an end. Boom, check mark met. 4-hour chart, do we have enough room up to the 4-hour 50 EMA so that we can make at least 2%? Yes, we do. There is enough room. So the 4-hour chart is overextended. It needs a pullback to the 4-hour 50 and 0.38 to Fibonacci. And because it's overextended, it does have enough room and enough reward risk ratio for this setup to play out. Last thing, do we have volume and do we have momentum? Volume is spiking up, so great. And we do have beautiful momentum when the 1-hour chart started to develop this beautiful low test, being squeezed to the upside with this big bullish candle. And at the exact same time, the 4-hour chart had a double doji and was developing this beautiful bullish engulfing. So the momentum and high volume was there. So that's the criteria. This trade fits all the criteria. It went and worked out beautifully. This is exactly what it's supposed to look like. Enter on a momentum break of the 5-minute 50 EMA, have a safe stop, and let it ride. And then a day or so later, profit target was hit. So that's it for this example. It's a simple one, but this intraday chart, literally, this is what a beautiful advanced breakout is supposed to look like. Simple, simple and clean. That's how I like my charts. I don't like any crazy, confusing price action. Just simple is best. So with that said, guys, I'll talk more about this setup in the next lesson, focusing on the entry, stop loss, and target. But for now, let's look at the next example. All right, guys, so in this example, we're going to be looking at one of my favorite positions of all time, actually. And this is a big trade. It was a trade for just over 8%. When it was running at the highs, it was running at about 10% in total. So it is a really good trade. The reason why it's so large is because of multi-time frame analysis on higher time frames, but it was executed as an advanced breakout on a lower time frame. So let me dig into it a little bit more detail again, break it down in its entirety. So with that said, let's have a look at these higher time frames here. So obviously the ones that we were looking at previously, the advanced breakouts, just know that the ones that we looked at before, they were just pullbacks, but pullbacks on a daily time frame, right? But they can be taken in any type of way. They can be taken with the trend, against the trend, just like the other two strategies that we've learned. They can be taken with the trend or against the trend. If you're going against the trend, then that's typically going to be a quick 1-to-1 or mainly a quick trade to the most ideal target. And if it's an advanced breakout, then the most ideal target would be the 4-hour 50 EMA for 2%, right? If it was a CBO, then recent highs. If it was a IBO, then the 4-hour 50 EMA, right? So that's the pullbacks. That's the most ideal targets on pullbacks. Sometimes once in a while you might want to push it a little bit farther, but on pullbacks typically you would just be taking a trade up to the safest target for that specific strategy. Now when you're trading with the general trend, not against it but with it, well, that's when you can really supercharge your positions. That's when it's not just a 1-to-1 or a 2-to-1. At that point, it can turn into a 3-to-1, 5-to-1, 10-to-1, even if the opportunity is there, because again, you're trading with the overall momentum. So in this case, again, this was a trade that I have taken last year in 2017, back in October. It was October 20th when I took this position long. So let's make our analysis. Let's do our bias. So what's our bias here? Right away, when you look at the monthly time frame, you notice that we have support and resistance. Previous highs, what was once resistance, became support, right? And now a double bottom with this bullish explosion to the upside, that bullish engulfing, right? So target monthly 50 EMA region. There's also pretty good daily resistance in that area. Do we have lower time frame confirmation? Yeah, weekly triple bottom, break and retest of horizontal support and resistance. Zoom out, there's that upper level right there. So triple bottom of rejecting the lower level, and then a break and retest higher low, rejecting that upper level. Perfect confirmation. Daily time frame, what about that? Well, here's that same horizontal level as what we just saw on the weekly time frame. When you zoom out on a daily, again, there it is. So price action is holding it as resistance. And then what do we have here? Left shoulder, head, breakout, higher high, right shoulder, trade long. Perfect. This is literally full multi-time frame analysis. So the monthly is the beginning, weekly confirms it, daily has a full trend change. What kind of setup is this, guys? Think about it. Rejection on a higher time frame, break and retest of the 50 EMA on a lower time frame. IBO C. Actually, no, IBOA. This is an IBOA because the weekly chart has the triple bottom and the higher low. The triple bottom is the sign of a bullish price action, so this is an IBOA. It's one of the safest IBOs that you can take, and this is how we're going to talk a little bit more about that in a follow-up lesson, but this is how you literally supercharge your positions, is apply the strategy on a higher time frame and apply a strategy on a lower time frame, and this way what the best opportunity is here. You just play the run. You can either take profit at the weekly 50 EMA, or you can push it farther up to the monthly 50 EMA and such if you wanted to. So you're ready right away. What the most ideal target is. The most ideal target, weekly 50 EMA. You want to push it farther because you like what you're seeing, well then the monthly 50 EMA. So easy. So this is what gave me the bullish bias here. It was a, again, beautiful setup. And already prior to this entry, I already taken a few positions here. I was trying to catch this once over here and another time over here, I believe it was. And that I ended up taking about 4% in profit and then exited before, just after the tweezer tops when the intraday chart started to break down. So this was another try that I wanted to get into this position. I've been trying to get into this along, playing the monthly run up to the monthly 50 EMA for quite some time. So then I finally was able to get into it with that advanced breakout right here, okay? After that, it never presented any other opportunities. Let's have a look at that. So do we have a rejection? Do we have a bias? Do we believe that a new run is happening? Yes. Do we have a candlestick formation at the time of the entry? No. That bullish engulfing developed after the trade was taken. But we did have that strong price action bias, right? The strategy was there. We had a strategy on it. This was, again, a strategy, an IBO A. Perfect. That right away gives us a bias, you know, and with a high probability bias, actually. So that's great. Then we go lower. Do we have price action telling us that the market is decelerating at that support? Well, right away, you can see that right here we have that support zone. Same level as on the weekly, same level as on the daily, right? A little bit of a zone here on a 1 hour time frame. Then you zoom in a little bit closer, make this larger. And then price action started to decelerate, double bottom, deceleration, double doji, bullish engulfing low test, and trade was taken long. You know, so it's not like an amazing triangle pattern or anything like that, but when the higher time frames present you such a good bias, you can loosen up your criteria a tiny bit, because you already have a very strong bias on the higher time frame. So this is already starting to confirm my bullish bias, you know, when this gave me the double bottom and started to decelerate at very good support and gave me the double doji and that bullish low test to the upside. At that point, I took the trade long. That was my confirmation. Now, I'm not targeting the 4 hour 50 EMA here, so that is not part of the criteria anymore, you know, because I'm taking this as a big position based on a higher time frames, right? So I'm not targeting the 4 hour 50. So the criteria of, you know, you have to make 2% before the 4 hour 50 EMA does not apply here. Why? Because I'm trading through the 4 hour 50. My idea is to trade through the 4 hour 50 and push just as far as possible because of the higher time frames, right? So that's the difference between the two. When you're just playing the pullback 4 hour 50, great target placement. When you overall playing with the trend, you know, playing in favor of the trend, then you can kind of trade through that 4 hour 50 and let it ride, you know, if you wanted to, like I did here. So then the 4 hour chart, I still want to make sure that there's bullish price action though, or some kind of bullish confirmation. So we do have this support, we do have the bullish MACD, and then at the time of the entry, we decelerated, double doji, this low test, and trade was taken right there, right at the close. So good rejection, you know, so I liked what I was seeing, good rejection, good double bottom, good candlestick formation on a 1 hour chart, and the trade was taken long. And again, this is an advanced breakout. Now, if you were not comfortable with the risk, even though the higher time frames were perfect, like amazing, well, this never presented any other opportunities. You can see that it never presented an IBO, it never retraced, it never presented a CBO, it never retraced. You know, maybe like you could have entered right there. That was okay. It wasn't the greatest, but that was okay. So it never really presented like an amazing opportunity from an intraday point of view after that advanced breakout. You know, so the lesson here is mainly when you're waiting for beautiful opportunities like this to develop, because at this point I was just waiting for weeks, you know, I already knew that this setup was happening when we had this breakout to the upside. You know, at that point I was just waiting for a retracement, and when it happened, I was already ready. Why? Because it made my watch list. This is a normal strategy. This is an IBOA, right? On a higher time frames, a swing play. So I'm already waiting for that swing play to play out, but instead of taking a swing trade, I ended up taking a day trade on a lower time frames, right? And that's how you supercharge your positions. That's how you go from not making 2%, but making more than that, much more than that, you know? So then I took the trade long, price action exploded to the upside, continued to go up and up and up and up until finally at the highs I was running at about 10%. Then there was a high impact news announcements coming in, and one of my management techniques told me to get out of the position, because one thing that I hate is losing a lot of profit when I'm running really well, so I knew that a high impact news announcement's coming in. Then all of a sudden, we'll talk about the exit later in the next lesson, plus the entry and stop loss and target and stuff. But I exited the position just when this trend line was broken to the downside. We had a little bit of bearish MACD divergence as well develop on the 4-hour chart. So it was like a great exit. And as I exited, pretty much an hour after or so, check it out. Boom, news announcement came in. That was about two hours after the trade. And then just continued to drop. So at the highs, I was running at 10%. I exited right here just when it closed below the trend line for 8.4. If I held it, my stop loss would have been hit because I had my stop loss bulletproofed and moved up to about here. My stop loss would have been hit for 4%. So that's how important management is. Management is extremely important, and you need to have a management plan. So that's kind of it. I'll talk more about the management and stuff like that in the next couple lessons after the strategies, but in the next lesson I'll focus more on the entry, the stop loss, the target. We'll do kind of what we did with the first strategy, where I kind of take you step by step, 5-minute by 5-minute candle, and plan that entry. So that's kind of it. So to summarize, this one's a little bit different than the other two because it's with the trend, not against the trend. The against the trend positions, playing the pullback, you want to take your profit and move on, so targeting the 4-hour 50 is a beautiful target. However, when you have a beautiful opportunity that's with the trend, maybe a swing strategy is present, like this IBOA, beautiful setup is present. So at this point, you have more room, you have more price action or more analysis backing up your bias, which is long to the upside massively. When you have that, you don't have to target the 4-hour 50. You can let it ride for more profit. So that's kind of it, guys. I hope you enjoyed this advanced breakout. This is, again, fits all the criteria, but it's just a tiny bit different, But the difference is mainly is that it's with the trend, not against it, So with that said, guys, that is it. Watch this one again. In the next lesson, we're going to cover the entry, the stop loss, and the targets. And in the next example, in this lesson, we're going to have a look at a swing play. So with that said, guys, let's look at the next example. All right, guys, so in this last example of an advanced breakout, I'm going to show you a swing trade, what it looks like on a higher time frame, what an advanced breakout looks like on a higher time frame. And we're going to be looking here at QECAD from late 2017. The daily chart here is pretty much a perfect advanced breakout. So let's start digging into it. The analysis here does kind of start to begin on a monthly time frame, right? So the monthly chart is stalling at some support, so the trade was happening right around this time, so the monthly chart already kind of decelerated, formed a low test, and the trade was happening around this time period here. So you can kind of see that the monthly chart is in a way ranging sideways. However, we do have the support, so that is good, but we also do have some bearish MACD divergence. And because we are kind of like at the top of this trend, right, we've been trending upwards for quite some time, I wouldn't want to really push it all the way up to the highs. You could, chances are it's probably going to get there, but, it's might be a better choice to just go in easy, take profit at the weekly 50 EMA. But I like the rejection, I like what's happening here. So then the weekly chart should be a little bit ahead of the game. And if you look at the weekly time frame again, there's that support that we saw on the monthly. Look how good it is on the weekly, right? It has a lot of really good rejections. 1, some consolidation, 2, 3, 4, 5, and this is the 6th, right? So that's a really good support and resistance zone. And then when you zoom in, you'll notice again, price action fell. It started to decelerate. It gave us some bullish candlestick formation, and then a trade long happened around this time. And again, what's the most ideal target? 50 EMA, right? If it's a day trade, the 4-hour 50. If it's a swing trade, the weekly 50, 0.382, right? So that's good. And then you drop down to the daily chart and take it a step farther, and then you'll notice that the daily chart has a pattern, has the advanced breakout. So what do we want to see? What do we want to make sure? Well, we want to make sure that it's sitting at some strong support and resistance, which we know, monthly, weekly, it already proved that. Daily chart is the same thing. Then on a daily time frame, on that lower time frame, we need to make sure the price action is decelerating. It is slowing down at that support and resistance, and that the end of a trend is coming. And that's true. We are decelerating. We do have this descending triangle in the market. We do have bullish MACD divergence. We did form a double bottom right here, okay? And we are at the end of a trend. Wave 1 breakdown, wave 2 pullback, wave 3 run, wave 4 pullback, wave 5 run, okay? Let's even see how the Elliott wave theory and Fibonacci retracement plays out. There it is. We even have perfect Fibonacci retracement to 0.618 fib, right? So this is literally perfect Elliott wave theory. The trend has come to an end. Wave 5 has come to an end. We did hit the wave 5 target. We are at support, so at this point, look for an entry long, right? So this is the advanced breakout. It's just how we saw it on a intraday levels for a day trade. It's the same kind of thing on a higher levels, for a swing trade. Now, there's many different plays on, many different ways of trading it. Obviously now, when you notice that this advanced breakout has been happening, when you notice the pattern and its price action sitting somewhere around this time period right here around, December 6, December 7, December 5, at this point you can already start looking for a trade, start looking for an opportunity. If you're a day trader, you can already start looking for a day trade, to take this trade long up to the weekly 50 EMA, right? But again, how can you execute this? Well, you can execute whenever you're ready, whenever you feel like you're ready. There was a decent low test right here on November 20th, but it wasn't kind of at the peak of the wedge, so now when we get the double bottom, it's a little bit more development, right? So where could you take it? Well, you could have taken kind of it at this inside bar right here, right after the inside bar. However, at that point, the intraday chart still didn't really fully confirm it. Let's have a look. So that was the 5th and the 6th. So when we go to the 5th and the 6th here on the 1 hour chart, you'll notice again, the 5th, we were sitting right here. We were still kind of trending downwards. We were holding that 1 hour 50 EMA, but then the higher low developed on the 5th. And then price kind of popped to the upside, but still didn't clear the trend line on the 6th. But bullish price action already started to kind of develop. Bullish pressure is already developing here, but it was fully confirmed when it finally broke out on this 1 hour time frame. So when it fully broke out, that's kind of when it was confirmed. But, in reality, anywhere during this time period, you could have already been taking the trade. Just need to have a little bit of a wider stop loss, So, really, when we look at this daily chart, the trade kind of could have been taken anywhere here, once you believe that the 1 hour time frame was giving you that confirmation, so targeting that weekly 50 stop loss somewhere below the lows, so like that, 100 pips. And if you entered lower, see how much of a difference it makes in entries. So 350 pip target at that point, 100 pip stop loss roughly, and the reward risk ratio is 3.5, percent. Pretty good. If you took it higher, kind of when the intraday charts confirmed it on the 7th there, so on the 7th when we fully kind of broke out, and then you entered on the 7th, well, at that point, obviously, your reward risk ratio would have been 2 to 1, okay? So, you see, entry price does make a difference, and if you're going to be a little bit more aggressive, like obviously you can, in this case, you would have pulled out at 1.5% more, 3.5% instead of 2. But that's why it's nice to look at the lower time frames, such as the 1 hour chart and the 4 hour chart, to see if there is any kind of bullish price action coming in. Because then you're not going fully blind. You can actually look at the 1 hour chart and be like, yep, we do have a higher lows here developing. It is starting to break out. It didn't break out fully, so, there might be a little bit of a risk there kind of thing. but higher lows are forming, so chances are it is going to go up. So if that's kind of your thought process, then you can take the trade, or simply wait for more confirmation on that 1 hour chart and then take it. There's obviously different ways of approaching it. It's what you feel comfortable with. This is, again, the strategy being present on a higher time frame, and then execution is what you're comfortable with. Either go a little bit more aggressive, but as soon as you believe bullish price action is there, you can go long. That's kind of my opinion. So at the end of the day, beautiful trade. You have this deceleration on the weekly, you have this price action pattern on a daily, you have the support and like the candlestick formation on the monthly, and then the trade long has happened. And then you took it, and price exploded to the upside. But what happened about after you have taken the trade? So after this advanced breakout happened, what do we have here? This is kind of an ABO beat, right? It broke out. You're waiting for that higher low on a weekly chart. So this is an IBO initial breakout B. So they all kind of work together. Now, that's kind of it, for this video. In the next lesson, I'll look at this trade again and I'll kind of show you how to execute it. But, I just kind of wanted to tell you that you can find these patterns on higher time frames as well. And when you find them on higher time frames, it just gives you an easy bias, either long or short. In this case, it just gives us an easy long bias, and multi-time frame analysis is confirming it perfectly. And then if you're a swing trader, right, you can take it as a swing trade. You can look at a lower time frame to confirm it and then execute, or sometimes you're just going to have an epic low test. In this case, we didn't have like an epic reversal, but if we had like a beautiful low test, then you can just go long right there. At that point, imagine if we had something like this low test right here, but at this point in time, then at that point you can just literally go long right away, kind of thing. But still, you can still look at the 1 hour chart to confirm, but at least you would have a better reversal candlestick. In this case, we needed a little bit more confirmation. Or, right, so that's a swing option, or you can look for this kind of analysis and then look for a day trade, and when you kind of go, that would be like the full package. The analysis would be beginning on a monthly, on a weekly, on a daily, and you would have the advanced breakout on a higher time frame, and then you would go even deeper on a lower time frame to this time period of around December 6th, December 7th, right? And look for a strategy there. And what do we have here? What is this? So let me zoom in on a 4 hour chart. What kind of setup was it? Right here. A CBO, right? So we bottomed out on the 5th and the 6th. And then on the 6th, we broke out fully to the upside, broke the 4 hour 50 EMA, and then came back to retest the 1 hour 50, the 4 hour 50, 0.38 to Fibonacci with a higher low. Trade could have been taken right there with a 5-minute break and pushed to that weekly 50 EMA for 7.5%, right? Big difference. Pretty much just an extra 5.5%. Stop loss would have been 0.618 Fibonacci, like normal CBO stop loss, right? And that's the power of day trading. That's the power of kind of combining swing trading and day trading together. When you find these beautiful opportunities in the market, and then you're able to kind of execute it as a day trade, execute a swing trade as a day trade with a day trading order, it makes a big difference. Or you can just obviously take it easy and just place the swing trade. So that's kind of it, guys. Again, that's the example of an ABO. We spent, I think, well over an hour kind of showing you what an ABO is. And just understand that it is a little bit more of an advanced, a little bit more of an aggressive position. So there's a few things that you need to remember. Let's summarize. You need support and resistance on a higher time frame. Right, so you need to believe that that support and resistance is being rejected. Then, on a lower time frame, such as the daily or the 1 hour, you need to make sure that there's a price action pattern that tells you that the market is decelerating at that support and resistance, right? And that a trend is coming to an end. And we do have that here on a daily time frame. We do have this descending triangle. We do have the bullish MACD. We do believe that a trend is coming to an end We are at the bottom of a wave 5 cycle. Wave 1 breakdown, wave 2 pullback, wave 3 run, wave 4 pullback, wave 5 run, deceleration, trend coming to an end, bullish MACD, right? So it's meeting all that criteria. And trading ABOs, the only main advice that I can give is be patient, be very patient with them, because if you start executing them just randomly when they don't have full development, then that's really going to cut into your profits. This is an advanced strategy. You need to be patient with it. You want to make sure that price action has fully decelerated and so that that it's ready to go, and that's just going to keep your strike rate high. And again, with this, if you target a minimum of 2-to-1 reward to risk ratio, then even if your strike rate is 50%, you're still making money, but it should be a little bit more than that. And that's kind of it, so you guys saw that you can execute it as a pullback play or as trend continuation, as you guys seen in the previous example 3. And those are very powerful. So that's kind of it, guys. And again, just know that the first 2 strategies, strategy 1 and strategy 2, they're kind of the main strategies. They happen the most in the market. They're basic strategies. You can become consistent with them and make really good returns. The advanced breakout is another awesome strategy, but it's a little bit more advanced, a little bit more aggressive. So maybe once you already become consistent, it's time to look into more advanced strategies like the ABO, But at the end of the day, it's just a personal preference. If you feel comfortable trading ABOs, trade ABOs. Just be obviously a little bit more patient with them so that they develop fully. And with that said, that is it. So I hope you enjoy this lesson on strategy 3, advanced breakouts. In the next lesson, we're going to be talking more about the execution. So the target, the stop loss, the entry, all that kind of good stuff. So we'll be looking at the same examples, but focusing more on the entry side of things. So with that said, guys, that is it for the advanced breakout strategy. And I'll see you guys in the next lesson.